Hello, I'm James Preston and welcome to another edition of Executive Corner Expert Talks exclusive to Kalkine TV. The demands of modern life have led to many more investors entering the market. A common trend for many of these new investors, though, is that they are time poor and approach investing from an emotional standpoint. Jaaims is a financial services technology that aims to address these issues head-on, utilising artificial intelligence to successfully manage a portfolio to maximise profit and minimise emotional biases. The founder and CEO of Jaaims is Tui Eruera, and he joins me live now on Kalkine. Tui, a very good afternoon to you.
Hi James, thanks for having me.
Well, Tui, great to have you here. Can you let our audience know exactly how Jaaims functions and what was the motivation behind creating the company in the first place?
Sure, so Jaaims is an automated AI investing app and we're built for the everyday investor. So the backstory is that we've developed our own technology that the large institutional banks have been using for many years. But for the first time, we've enabled it for the everyday investor on a subscription basis. So it's giving the everyday investor fighting a chance against institutional banks.
So we like to hear, taking a bit of power away from those big boys, that's for sure. Now, a key tagline for Jaaims is removing the emotion from trading. How important would you say that is when dealing with stocks, and how does Jaaims help to remove those behavioural biases?
Yeah, definitely. So look, that is the biggest challenge that every investor has, is the emotional control and understanding, removing your bias from making your investing decisions. So, even the most experienced investors that work for large banks for over 30 years, their biggest challenge is the emotional control, when to execute, when not to execute, but also removing their personal bias that they might have towards a particular industry, stock, or particular sector. So that's probably one of the biggest human flaws that we have, is that we have this bias towards things that we see a lot or are involved. So using technology, our AI technology isn't biased to anything, because obviously it's technology, it's not a human being. So with our technology, it's just purely looking at data and making an informed decision from the data it has, and then obviously executing when it thinks it's appropriate, again based off key metrics and data.
That's great. It's very much a case of Gordon Gekko as opposed to your local tree hugger. So I think that's definitely quite useful moving forward for people that are trying to get into the space and perhaps don't have the greatest financial IQ, for example. I think another big movement that's happened in the last few years, and you've mentioned this as well, talking about big banks just a little while ago, I think especially with the gradual mainstreaming of cryptocurrencies, it's been the concept of decentralisation. Would you say it's fair to say that the technology Jaaims utilises was traditionally out of reach for most people in years gone by?
Yeah, definitely, and that's because of the sheer cost to operate the technology. So obviously institutions, they're dealing with large volumes of money, so naturally their commissions and their earnings are much larger than, say, your smaller company. So this technology isn't cheap by any means to develop or operate, because you are using sophisticated artificial intelligence technology, and I can tell you that behind the scenes there's a lot of development and maintenance required to keep that technology running. So from our point of view, what we've done is that we've done the hard yards and obviously incurred the cost to develop the technology, and now it's about obviously mass adoption, because the more people adopt, obviously we can offer our technology cheaper over time as well. So it's sort of a different approach, but what it means is that the everyday investor, like that person who might have $5, 10, 20, $50,000 who they want to get invested in equities, they can access, really sophisticated and market-leading technology that just wasn't really accessible to them prior to us coming along.
And we know often with, I suppose, the older generations, there's a bit of a hesitancy to get involved in these kind of new technologies when traditionally you can go down the path of, say, a traditional portfolio manager. Is that where you're seeing a bit of a hesitancy with adopting something like Jaaims? Is it more young investors coming to use the platform, or is it a bit of a mix of both?
It's a mix of both. So, I think you've pointed out an interesting topic. There's a big transition happening now in investing. It's this battle between talent and technology. So obviously the traditional fund asset manager very much based on talent, and firms would hire really talented people that can understand markets. And then now you've got this emergence of technology, which is automating functions, and obviously, being very competitive, especially in financial markets, what we're doing against that individual as a talent. So there's this big trend, this big crossover happening at the moment of talent versus technology. And I think that comes down to the everyday person as well. So obviously I think humanly we tend to fight against technology because naturally we don't think something's better than us. But what happens over time is that you'll learn to adopt that as part of your life. So, the biggest thing that I've seen probably in the last 3 or 4 years is really the adoption of Siri and Alexa and those voice devices. And I'm actually even seeing like huge adoption with kids, obviously starting young. So this adoption's happening naturally. And obviously through our technology, we do have a lot of uptake from that younger generation, under 35, etc. However, we are now starting to see older people come on board and start to understand the technology. So they don't really... they always take a little bit longer, and they want to know more about the technology we're developing, which is completely understandable. So it's all about, education and, making people aware that, hey, don't be scared of this technology. This is something that we should be embracing because it's going to help us. It's not going to hinder us.
I think you might have hit the nail on the head there, though. I mean, when we're talking about some of these older investors, just remember the first Terminator movie came out in the 80s, mate. That is well more than 40 years old. We've also got Terminator 2 in the early 90s. There is still Skynet fears there. I can kind of understand it from their perspective. But let's focus on the young investors themselves. Now, in 2022, there is obviously quite a few dilemmas that younger people are facing at the moment. They're looking to get ahead, and that's in the backdrop of a housing crisis. Of course, we've had the pandemic, there's rising inflation, and then by the same token, you've got them working longer hours for less pay, and ultimately they're just quite time poor. Would you say that Jaaims, as a result, is a viable solution for someone facing that scenario?
Yeah, definitely. And I think that we're seeing, especially in Australia, we're getting a lot of people fed up with the housing market. The last 2 years, I think we had 25% growth in property last year, and prior to that, it was like 10 or 12. So we've had massive growth in property prices, and people in their late 20s, early 30s, especially in the capital cities, it's so hard to get into the property market. And your deposits are now getting larger. There's discussion now that 10% might not be enough because obviously we've got some interest rate rises, and they might be moving the LVR up to like 80%, so a 20% deposit. So it's just making it so much harder for people to get into the property market. And that's why I think you're seeing adoption or take up in cryptocurrencies from that generation, as well as other means to invest their money, because you're coming to a place in your life that you might have saved $200,000, but what can you buy property-wise with that deposit? It's really difficult. So people are now looking at alternative assets to grow their wealth, and obviously you're seeing cryptocurrencies have a huge take-up, but also we're sort of seeing take-up now that people want to think, well, I'm not going to earn anything in the bank with my money. I'm not going to buy a house anytime soon. I've got to get this money working for me. So technology like ours is really accessible. They can go online, they can learn about it, and you can get your money working for you very quickly. And I think that's one of the strengths of Jaaims as well. So you can dial up and down how much money you want working on the algorithm. So say if you have 200,000 and you can have that fully deployed, and then say if an opportunity comes up where you might move or you might go on a holiday, you need that capital, you can just wind that down really quickly, withdraw that funds, and obviously use that for whatever need you have. So definitely seeing this change, and we're sort of seeing really a lot of adoption in that bracket, especially in capital cities, of people who are just fed up with the housing market.
Well, you mentioned there that you can sort of wind it up and down, but how frequently does it trade on your behalf? Is it always looking to make those little incremental trades to try and gain, I suppose, a fraction of a percent here and there, or is it more a calculated, spaced out process from the AI?
Yeah, so it's definitely not high frequency or like a frequency trading platform. It's definitely a bit more longer term, but it's not what we class as medium term. So it's definitely really short to medium term. Our average hold time is anywhere between 16 and 20 days. But in saying that, we might hold a trade for 3 days and then close it, or we might hold a trade for 100 days. So it's just depending on what the algorithm's picking up in the market in the way of sentiment. But we do know that it does perform strongly, definitely around those earnings periods, because the algorithm's able to pick up the sentiment in the market for particular stocks coming into earning period, and then obviously places trades, and you see a lot of short-term trading where it might come in 5 or 6 days prior to the earnings call. The earnings will come up, the stock will pump 10, 15%, and then you have a nice gain just in 5 or 6 day trade period.
Now look, without revealing your trade secrets, because that's not what we're about here at all, but how much data is getting pulled into this algorithm? Is it looking at things 20, 30 years in the past to try and see like a long-term trend forming, or is it more focusing on, say, a year or the past 2 or 3 years? How does it work?
We do use historical data, but it's really what's happening in the moment. So the algorithm, we digest around about 10 million pieces of data per day, and that's from social media, various news sources, analyst reports, down to even when a CEO of a company will make an announcement. And then we digest that data to understand the sentiment at that time. And then we obviously benchmark those scores against our historic scores as well. And then we obviously analyse stocks based on a fundamental basis and all those other things. So what our algorithm does, it combines all these types of analysis to determine the buy and sell rating at that time. So the thing with our technology is that it's very difficult to backtest. So the reason, we do get some questions about backtesting, and we do have results back to 2017. However, because we capture news and social in real time, you can't backtest capturing that data. And that's the key. So that's why we say we analyse in real time, because we can't access historical social feeds, as an example, and news.
Well, just focusing on the social feed and that metric in terms of pulling it in for data usage, and also you made mention of cryptocurrencies. Now, obviously that's quite a volatile asset class, and one thing that does seem to be driving a lot of the movement in that space is, in fact, social media usage, whether it be Elon Musk on Twitter showing a picture of a grape and then all of a sudden Grapecoin goes 10,000% up. Do you have any plans to go into the space of cryptocurrency trading, and how much do you think a social media feed, for example, would you be able to get enough data from that alone to try and predict movements within the space?
The answer is yes. So if you wanted to move into a pure sentiment strategy, yes, you could. I wouldn't know how that would perform. As we know, it is quite volatile in that space. However, I can tell you that we're definitely looking at it. So we started a project about 2 months ago, 3 months ago, where we really started investigating our ability to offer cryptocurrencies as part of our offering. We hope to sort of have something this year. However, it's quite a difficult space, because ASIC hasn't come out with any sort of regulatory guidelines as such. So we're one company that, we pride ourselves in being compliant. We hold our own Australian financial services license, so we don't use others. So, it's very important to us that, we maintain that integrity as a company. However, there's definitely a lot of work going on in the background. So our trading team, or our quant team, is actually working on, modifying our algorithm, understanding, traits of cryptocurrencies. But, we have a different perspective to crypto, I think, to others. We don't really see them as currencies. We see them as projects or companies. So we believe every project, can have some good fundamentals, especially if they're solving a problem or a need. We're seeing some good disruptive DeFi plays come in, against the Swift transfer protocol, XRP, and all those. And, those do have some really good fundamentals that you can look at compared to what's happening in the market. But, we're well aware, though, that sentiment is a very strong driver in that space, and we really want to understand that influence, and that's probably where all the R&D is happening with us at the moment. But what we think we'll find is that we're going to keep seeing more uptake in that asset class. So over the next 2 years, you can have more liquidity, you can have more funds in that space, and that will help iron out, the volatility. Because at the moment, it's really only I think $4 trillion space, or $2 trillion. I'm not sure. And that's 2 trillion, sorry, and that's still not the market value of Apple, as an example. So, that space still has a lot of growth, and the more investment you get into that asset class, the less volatility you'll have over time.
Absolutely. Now, look, that's something that you're currently developing, but there is also a few portfolios that you dropped recently, namely 6 of them, one of which is an ETF, or should I say an ESG. Can you tell us a bit more about these developments at Jaaims?
Yeah, so at the end of last year, we launched 6 new portfolios as part of our standard subscription. And that came from, obviously, customer feedback that people wanted different options of portfolios to invest in, specifically targeted in different sectors or different areas. So the 6 portfolios we released is an income portfolio, a growth portfolio, a balanced portfolio, a top 50 ASX portfolio, top 50 US, but also a really targeted ESG portfolio, which has been the highest take-up portfolio since we've launched. And what we've done with the ESG is that we've listened to the market, because people now are really conscious about how their money's being invested, and they want to say, and the classic example is that we're now seeing superannuation funds divest or remove their investment into coal at the moment. So that's just how much momentum this whole ESG space is getting. So we worked with Sustainalytics to access really detailed and comprehensive ESG data, and then we're able to use that data to really rate companies how they're performing against their peers, but also in generally by country on environmental, social and governance issues. And our algorithm is able to generate a really targeted ESG portfolio with the top ESG performers in the Australian and US market. And so, that portfolio really suits that ethical investor who really wants to make sure that they have a nice balanced portfolio, but, it's being invested in companies that have ESG as priority.
We're speaking with Tui Eruera, the founder and CEO of Jaaims, which is an artificial intelligence trading company. Now, Tui, what would you say is the approach to trading in general from Jaaims? Is it more passive or active, or is it somewhat of a combination of both?
So we'd say that we're a combination of both now, and that was with our release last year where we introduced ETFs into the platform. But we don't do ETFs commonly like other funds or trading applications. We use ETFs to diversify our portfolios. So one thing that we really know we're conscious of is that, we're moving into a very different market from the last 2 years to this year. As you mentioned before, we're heading to a high inflationary market. We're already starting to see pullbacks in growth, and the passive ETF strategies are not going to be as strong as they were. We've had an unbelievable bullish 10 years in markets, and as much as I'd love for them to continue, I think that we have to be obviously vigilant that, the pot of gold won't continue forever. So with Jaaims, obviously the algorithm, we are an active strategy. We're holding, trades anywhere from 4 to 100 days. However, you can now allocate, say, 30% of your allocation to ETFs. So you can have that passive strategy and you can have that active strategy. And as mentioned before, you can wind up and wind down your allocation to ETFs or the passive strategy or to the active strategy. So with us, you've got that, the best of both worlds, that you can, accommodate changes in the market and turn up and turn down your allocation within Jaaims.
Now, we know you're taking a look at the crypto space, but what else does 2022 have in store for Jaaims, and how do you think that'll work into the market as it's unfolding?
So this year we're all about just continuing to innovate our product into the market. We've just obviously released the Android app, and we've obviously had the Apple app out for a while. you will see us come to the desktop this year because we've just been getting a lot of requests that people do still like a desktop version. We're looking at cryptocurrencies, as you mentioned. That one is a working project. We might see that towards the end of this year. And then our big project is that we're moving into the UK this year and Europe as well. So using our technology over there and allowing the Brits to use some good sophisticated technology.
Look, you certainly won't get any whining ponds with your technology arriving on their shores, that's for sure. Tui, it's very exciting to see exactly what you are developing there at Jaaims. Just before I let you go, where can we find you? Is there a website, social media?
Yeah, definitely. Our website is jaaims.com. But the best way is just to go to your Google store or Apple store, type in Jaaims, Jaaims, and then app will come up to download. And I should actually just give a quick background on Jaaims. The name, how it all started is Jaaims stands for Just Another Artificial Intelligence Management System, but obviously we've shortened it to Jaaims. So that's the background on that.
Now, look, it's a great name, and I'm totally not biased about that. Removing all of my emotional trading, that's for sure. But from one Jaaims to another, Tui, it's been great to chat with you today.
Thank you, James, and thanks for having us on the show.
Well, that's Tui Eruera, the founder and CEO of Jaaims. And if you missed any part of that interview, you can catch the whole chat on our YouTube channel, Kalkine Media, so make sure to subscribe. That's all for now. I'm James Preston, reminding you to stay apprised and invest wise with Kalkine.